Did you know that nearly one-third of America's largest housing markets are now experiencing price drops for the first time in years? While experts debate whether this is a crash or correction, the numbers don't lie. Home prices are falling, inventory is piling up, and some cities are seeing their housing markets collapse faster than anyone predicted. If you're thinking about buying or selling a home, or if you're just curious about what's happening in the real estate world, you need to know which cities are in serious trouble right now. These aren't just small dips we're talking about. Some of these markets have seen prices drop by over 20% from their peak, and the bleeding isn't stopping. So, which American cities are experiencing the worst housing market crashes in 2025? Stay with me because what you're about to learn could save you from making a massive financial mistake, or help you spot an incredible opportunity. By the end of this video, you'll know exactly which markets to avoid and why smart money is already running for the exits. Let's dive right into the 10 cities where the housing market is completely falling apart. Number 10, Phoenix, Arizona. Phoenix kicks off our list, and if you thought the desert city was immune to housing troubles, think again. What's happening in Phoenix right now should terrify anyone who bought a home there in the last few years. Home prices in Phoenix have dropped over 10% from their peak in 2022. That might not sound like much, but when you consider that the median home price is still over $500,000, we're talking about families losing $50,000 in home value overnight. The construction boom that was supposed to help the housing shortage has turned into a nightmare. Builders went crazy during the pandemic, and now there are simply too many homes and not enough buyers. Here's what makes Phoenix particularly scary right now. The city has always attracted people fleeing expensive California markets, but that migration is slowing down dramatically. Why would someone move to Phoenix when they can get similar weather in other states for much less money? Add in the fact that Arizona's extreme heat is getting worse every year, and you have a recipe for disaster. Real estate agents in Phoenix are reporting homes sitting on the market for over 50 days, which is double what it was just 2 years ago. Sellers are getting desperate, and many are cutting their asking prices multiple times. One expert described the Phoenix market as having an oversupply problem that could take years to resolve. But wait, it gets worse. The rental market in Phoenix is also struggling. With so many new apartments being built, landlords are having to offer incentives just to find tenants. When both buying and renting become less attractive, that's a clear sign that a market is in serious trouble. If you think Phoenix is bad, wait until you see what's happening in our next city. Let's move on to number 9, where an entire state's reputation for growth is being questioned. Number 9, Tampa, Florida. Tampa is our first Florida city on this list, but it definitely won't be the last. What's happening in Tampa right now is shocking even real estate professionals who have seen it all. Home prices in Tampa have fallen over 4% in just the past year, and they're now down more than 10% from their 2022 peak. But here's the really concerning part. Nearly 30% of all home listings in Tampa have had their prices cut. That's almost 1 in 3 sellers admitting they priced their homes too high. Tampa's housing market got absolutely crazy during the pandemic. People fled expensive northeastern cities and thought they found paradise in Florida. But reality is setting in hard. The insurance costs alone are killing people. Homeowners insurance in Florida has become so expensive that many families are spending more on insurance than they are on their mortgage payment. Then there are the hurricanes. Every year brings new anxiety about whether your home will still be standing after storm season. Combine that with rising property taxes, and the fact that Florida has no state income tax doesn't seem like such a great deal anymore. The inventory situation in Tampa tells the whole story. There are now over 19,000 homes for sale in the Tampa area, which is a 32% increase from last year. When supply jumps that dramatically while demand falls, prices have nowhere to go but down. Here's something that should worry every Tampa homeowner. Homes are now sitting on the market for an average of 58 days. In a healthy market, homes should sell in 30 days or less. When it takes almost 2 months to sell a house, that's a clear sign that buyers have all the power and sellers are in trouble. Now let's move on to number 8, where Texas size problems are creating Texas-sized headaches for homeowners. Number 8, Austin, Texas. Austin has gone from being one of America's hottest housing markets to one of its biggest disasters. The numbers coming out of Austin are so bad that even longtime residents are questioning whether the city's growth story is over. Get ready for this. Home prices in Austin have crashed over 23% from their peak. Yes, you heard that right. Nearly 1/4 of all home value has been wiped out in less than 3 years. The median home price, which hit crazy heights during the pandemic tech boom, has now fallen back to levels we saw in early 2021. What happened in Austin is a perfect example of what economists call a bubble. Tech companies were throwing money around, remote workers were flooding in from expensive cities, and everyone thought the party would never end. Well, the music has stopped, and Austin is dealing with one of the worst hangovers in real estate history. The tech layoffs hit Austin particularly hard. Companies like Meta, Amazon, and countless startups cut thousands of jobs. When your local economy depends heavily on one industry and that industry goes through a major correction, the housing market follows right behind. But it's not just about job losses. Austin built way too many homes way too fast. The city approved massive housing developments without thinking about whether there would be enough buyers. Now there are entire neighborhoods with for sale signs on every block. 26% of Austin listings have had price cuts, and homes are sitting on the market for over 40 days. For a city that used to see bidding wars on every property, this is a complete reversal of fortune. The really scary part for Austin homeowners is that many experts think the bottom hasn't been reached yet. With more layoffs expected and inventory continuing to climb, 2025 could be even worse for Austin real estate. Speaking of Texas troubles, let's move on to number 7, where another major Texas city is following Austin's painful path. Number 7, San Antonio, Texas. San Antonio proves that Austin's problems aren't isolated to just one Texas city. The Alamo City is experiencing its own real estate nightmare, and the situation is getting worse by the month. Home prices in San Antonio have dropped nearly 3% year over year, but that's just the beginning of the story. The real problem is affordability. The median home price is over $300,000, but the median household income is only $55,000. Do the math. That means most families in San Antonio can't afford to buy homes in their own city. This affordability crisis has created a vicious cycle. Fewer people can qualify for mortgages, so demand drops. When demand drops, builders panic and flood the market with new homes to try to attract the few remaining buyers. This just makes the oversupply problem worse. San Antonio's population grew by 22,000 people last year, making it one of the fastest growing large cities in America. Normally, that would be great news for the housing market. But here's the problem. The city's infrastructure can't keep up with the growth. New residents are discovering that their commutes are longer, their utilities are less reliable, and their quality of life isn't what they expected. Mortgage rates of over 6% have made the situation even worse. When you combine high home prices with high interest rates, monthly payments become impossible for most buyers. Real estate agents in San Antonio report that many potential buyers are simply giving up and deciding to rent instead. The construction industry in San Antonio is also struggling. With fewer buyers, builders are having to cut prices and offer incentives just to move inventory. Some developments that broke ground during the boom years are now being completed in a much weaker market. Now let's move on to number 6, where Florida's reputation as a retirement paradise is being seriously questioned. Number 6, Cape Coral, Florida. Cape Coral, Florida represents everything that's going wrong with the Florida housing market right now. This southwestern Florida city has become ground zero for one of the state's most dramatic housing market collapses. The numbers from Cape Coral are absolutely shocking. Nearly 30% of all home listings have had their prices cut, and inventory has exploded by 41% compared to last year. But here's the really scary part. Homes are taking an average of 81 days to sell. In a healthy market, that number should be around 30 days. Cape Coral became incredibly popular during the pandemic as retirees and remote workers discovered they could get waterfront living for much less than other Florida markets. But that discovery led to massive overbuilding and speculation that has now come crashing down. The insurance situation in Cape Coral is particularly brutal. Homeowners' insurance costs have tripled in some cases, and many insurance companies have simply stopped writing new policies in the area. When you can't get insurance, you can't get a mortgage, and when you can't get a mortgage, the market dies. Hurricane risk is another major factor killing demand in Cape Coral. The city was hit hard by recent storms, and potential buyers are starting to realize that waterfront living in Florida comes with enormous risks. Climate change isn't some distant threat, it's happening now, and it's making coastal Florida properties much less attractive to smart investors. The rental market in Cape Coral is also struggling. With so many investors trying to unload properties, the rental inventory has increased dramatically. This is driving down rental prices and making investment properties much less profitable. Local real estate agents describe the current market as the worst they've seen in over a decade. Properties that would have sold in days during the boom are now sitting empty for months. But if you think Cape Coral is bad, wait until you see what's happening in our number 5 city, where California's housing dreams are turning into nightmares. Number 5, San Diego, California. San Diego has always been one of America's most expensive housing markets, but 2025 is proving that even the most desirable locations aren't immune to market crashes. Home prices in San Diego are down over 5% from last year, and with a median home price still hovering around $800,000, even small percentage drops represent massive dollar amounts. Many San Diego homeowners have lost over $50,000 in home value in just 12 months. What makes San Diego's situation particularly painful is that the city's economy has remained relatively strong. This isn't a story about job losses or economic collapse. Instead, it's about a market that became so expensive that it priced out almost everyone except the ultra-wealthy. The tech industry layoffs that hit other California cities have also affected San Diego, but the bigger problem is California's overall business climate. Companies are leaving the state in record numbers, taking high-paying jobs with them. When your local economy depends on highly paid professionals and those professionals start moving to Texas and Florida, the housing market suffers. San Diego's inventory has increased by 70% compared to last year. Think about that for a moment. There are now 70% more homes for sale than there were 12 months ago. That's not a small market adjustment. That's a fundamental shift in supply and demand. The luxury market in San Diego has been hit particularly hard. Homes priced above $1 million are sitting on the market for months, and many sellers are being forced to accept offers that are hundreds of thousands of dollars below their asking prices. Foreign investment, which used to prop up San Diego's high-end market, has dried up significantly. Chinese investors, who were once major players in California real estate, have largely disappeared due to economic problems in China and regulatory changes. Now let's move on to number 4, where another Texas city is learning that rapid growth doesn't always mean sustainable growth. Number 4, Dallas, Texas. Dallas rounds out our Texas trifecta, proving that the Lone Star State's housing market problems are statewide. What's happening in Dallas should serve as a warning to anyone who thinks big cities are immune to housing market crashes. Home prices in Dallas have fallen over 2% in the past year, but the real story is in the details. Nearly 25% of Dallas listings have had price cuts, and homes are sitting on the market for an average of 45 days. For a city that used to see multiple offers on every property, this represents a complete market reversal. Dallas's problem is classic oversupply. The city approved thousands of new housing units during the boom years, and now there are simply too many homes chasing too few buyers. Builders who thought they could ride the growth wave forever are now stuck with inventory they can't move. The corporate relocation story that drove Dallas's growth is also changing. While some companies are still moving to Texas, the pace has slowed dramatically. Remote work has made location less important for many businesses, and the cost savings of moving to Texas aren't as attractive when you factor in the property taxes and insurance costs. Dallas's rental market is also showing signs of stress. With so many new apartment complexes coming online, landlords are having to offer free months of rent and other incentives to attract tenants. This is making rental property investment much less attractive. The suburban sprawl that defines much of Dallas is also working against the market. As gas prices remain high and environmental concerns grow, the appeal of living in far-flung suburbs with long commutes is diminishing. Many Dallas real estate professionals are predicting that the market will continue to weaken throughout 2025. With more inventory coming online and buyer demand remaining soft, there's little reason to expect a quick recovery. Let's move on to number 3, where Florida's housing market problems are spreading to unexpected places. Number 3, Orlando, Florida. Orlando makes our list as the third Florida city experiencing a major housing market breakdown. The city that's home to Disney World is discovering that not even the Magic Kingdom can protect it from real estate reality. Home prices in Orlando have dropped over 2% in the past year, and nearly 25% of listings have had price cuts. But Orlando's problems go deeper than just price declines. The city's entire economic model is being questioned. Orlando's economy depends heavily on tourism, and while tourists are still coming, they're spending less money and staying for shorter periods. The families who used to buy vacation homes in Orlando are now thinking twice about investing in a market with so much uncertainty. The short-term rental market that drove much of Orlando's real estate investment is also collapsing. Cities across Florida are cracking down on Airbnb and vacation rental properties, making it much harder for investors to generate income from their properties. Hurricane risk is another major factor affecting Orlando's market. While the city isn't directly on the coast, recent storms have shown that inland Florida isn't safe from hurricane damage. Insurance costs are rising dramatically, and many potential buyers are deciding that Florida's risks outweigh its benefits. The construction boom that was supposed to help Orlando's housing shortage has turned into a major problem. New developments that looked like sure bets 2 years ago are now struggling to find buyers. Some builders are offering massive incentives, including paying closing costs and buying down interest rates just to move inventory. Orlando's rental market is also oversupplied. With so many investors trying to exit the market, rental properties are sitting vacant for months. This is driving down rental prices and making real estate investment much less attractive. Now let's move on to number 2, where one of America's most famous cities is facing an unprecedented housing crisis. Number 2, Miami, Florida. Miami takes the number 2 spot on our list, and what's happening in this international city should shock anyone who thought Miami real estate was bulletproof. Home prices in Miami have fallen nearly 2% over the past year, but that modest decline masks much bigger problems. The luxury condo market that defines much of Miami's skyline is in complete freefall. Many high-end properties are sitting empty, and developers are panicking about projects that are already under construction. Miami's housing market became a playground for international investors, cryptocurrency millionaires, and celebrities during the pandemic boom. But that speculative demand has evaporated. Foreign investment has dried up, crypto wealth has disappeared, and many celebrities are quietly trying to sell their Miami properties. The insurance crisis in Miami is worse than almost anywhere else in Florida. Many buildings can't get insurance at any price, and those that can are facing astronomical costs. When you're paying $10,000 a year or more just for insurance on a condo, the math stops making sense for most buyers. Sea level rise isn't some future problem in Miami, it's happening now. Regular flooding during high tides and storms is making buyers question whether waterfront properties are good, long-term investments. Some of the city's most prestigious neighborhoods are literally underwater during major storm events. The rental market in Miami tells the whole story. Luxury rentals that were commanding premium prices just 2 years ago are now sitting vacant or being rented at significant discounts. When landlords can't find tenants for expensive properties, it signals that the market fundamentally shifted. Miami's banking sector, which finances much of the local real estate market, is also showing stress. Some banks are pulling back from real estate lending in South Florida, making it harder for both buyers and developers to get financing. But as bad as Miami's situation is, our number one city is experiencing an even more dramatic collapse. Number 1, Winter Haven, Florida. Winter Haven, Florida takes the top spot on our list of housing market disasters, and what's happening in this central Florida city represents everything that can go wrong when a housing boom turns into a bust. Winter Haven became incredibly popular during the pandemic as buyers discovered they could get Florida living at a fraction of the cost of Miami or Tampa. But that popularity led to massive speculation and overbuilding that has now created a perfect storm of market conditions. Home prices in Winter Haven exploded by over 70% during the boom years, but now they're crashing back to earth. The city has one of the highest percentages of homes with price cuts in the entire country, and properties are sitting on the market for months without selling. What makes Winter Haven particularly vulnerable is its dependence on out-of-state buyers. Unlike cities with strong local economies, Winter Haven doesn't have enough local demand to support its housing market. When external demand dried up, the market collapsed. The vacation rental market that drove much of Winter Haven's investment activity is dead. Properties that investors bought thinking they could generate steady rental income are now sitting empty. Many investors are trying to sell, but there are no buyers at current prices. Winter Haven's infrastructure wasn't designed for the rapid growth it experienced. Roads are congested, utilities are strained, and city services are overwhelmed. New residents quickly discovered that cheap housing comes with hidden costs in terms of quality of life. The insurance situation in Winter Haven is catastrophic. Hurricane damages from recent storms have made insurance companies reluctant to write new policies in the area. Some homeowners are facing insurance costs that are higher than their mortgage payments. Local real estate agents describe the current market as the worst they've ever seen. Properties that would have sold in days during the boom are now sitting empty for 6 months or more. Many sellers have given up entirely and taken their homes off the market rather than continue dropping prices. So what does all this mean for you? Whether you're a buyer, seller, or investor, these market conditions create both risks and opportunities that you need to understand. If you're thinking about buying a home, these markets might represent opportunities, but you need to be very careful. Falling prices don't automatically mean good deals. Many of these cities have fundamental problems that aren't going away anytime soon. Climate risks, insurance costs, and economic challenges could make some properties poor investments regardless of their current prices. For sellers in these markets, the news isn't good. If you need to sell, you're probably going to have to accept that your home is worth significantly less than it was 2 years ago. The key is pricing realistically from the start rather than chasing the market down with multiple price cuts. Investors need to be particularly cautious. Many of these markets still have more supply coming online, which means prices could continue falling. The rental markets in most of these cities are also struggling, making it difficult to generate positive cash flow from investment properties. The broader lesson here is that no housing market is immune to corrections. Cities that seemed unstoppable just a few years ago are now experiencing dramatic reversals. Economic conditions, climate risks, and demographic changes can all combine to turn boom markets into bust markets very quickly. Remember that real estate markets are local and conditions can vary dramatically even within the same city. If you're considering buying or selling in any of these markets, make sure you work with local professionals who understand the specific conditions in your area. The housing market crash of 2025 is real, and it's affecting millions of Americans. By understanding which markets are most at risk, you can make better decisions about one of the biggest financial choices of your life. What do you think about these housing market trends? Have you seen similar conditions in your local market? Let me know in the comments below, and don't forget to subscribe for more real estate market updates. The housing market is changing fast, and staying informed could save you from making a costly mistake or help you spot an incredible opportunity. Thanks for watching, and I'll see you in the next video where we'll explore which housing markets are actually performing well in 2025. You might be surprised by which cities are still seeing growth while others are crashing.